how's it going? Happy belated New Year. We didn't get a chance this year to send out a letter in January. Things have just been crazy, to be honest with you. And I was, with all best of intention, wanted to send out a video as well as your monthly newsletter, but we just became too busy. So I'll try to cover everything in this month's February newsletter. Hope you had a bit of a good break during the year. Now that everyone's back in school, kids are back in school. Hope this year is going to be a great start to you. So there'll be quite a few things I just wanted to cover this year, a bit of a forecast summary of what we think is going to happen. So the one thing that we've realized is that as we inch closer to April this year, there are a few big changes that are happening that could potentially affect the market a little bit. First of all, as we all would know, JobKeeper is going to be finished at the end of March. And the big thing as well is the bank mortgage freeze, which is currently in place for many people until the end of March as well, which means that a lot of people out there have to start making repayment. The fear that we have with that is, once that all comes off, there might be more property coming on the market, which could potentially cool the market down. However, based on current market activity, I doubt that will happen. I think that the market will continue to stay strong this year. The latest facts that was reported by our federal treasurer, is basically what they found during this period this year is that Australian household has saved up more than 200 billion in extra money compared to previous years. This could be probably because people are not traveling, people are not going overseas or spending overseas. And this is the main reason I feel why our market is going so fast and incredibly hot at the moment, due to the fact that people got more savings in the account and are wanting to spend it, and generally we're geared to buy properties. That's how we're brought up. And the fact that interest rate at 2%, or some banks even offering under 2%, means that it is far cheaper to own a property than it is to rent a property, which is probably between the 4.5% to 5%. Up to the last week of December, traditionally, over the last 15 years that I've been in real estate, the market tends to cool down from the 15th onwards and don't tend to pick up to the 26th of January. However, this year, or last year / this year, what we've noticed is just a bit crazy. We've had almost no slowdown. We've launched 4 properties at the end of the 20th of December, and since then all the property was sold within a week, which is incredibly. And we were trying to take 2 weeks off to get a bit of time off to refresh, but we were back straight on the 4th of January just because everything is happening. Buyers are out there, the demand is out there, and it's one of the best time that we've seen in the real estate market since I started in 2007. The one thing is, this can get all complex, because really, what does this mean to you? I think that a lot of you will probably go there, okay, what does this all mean? If we're buying, we're selling, we're upgrading, we're downgrading, how does this news affect you? So I just want to take a couple of minutes to just cover all of that. So my advice, if you're a buyer in today's market, if you've already started looking, you might find it extremely difficult to win a property or to buy a property. This is probably due to the lack of stock on the market, as well as the fact that when you show up to an open home, you probably turn up to an open home with 20 groups, 30 groups, 40 groups, and having to compete in multiple offer situation. So as a buyer, my only advice to you guys is make sure that you get your pre-approval sorted well and truly in advance, the full pre-approval, to give you the best chance. Make sure that as soon as a property comes on the market, you call the agent to ensure that if they are prepared to do private inspection, that you're happy to do it, prior to get through the property as quickly as possible. But if they're not doing private inspection, they're having open home, as long as it doesn't get sold before the open home, show up to the open home. If you like the property, make sure that you make your best offer at the very first inspection, because there's a significant chance, I would like to guess probably more than 90%, that if you don't make an offer for most property at the first open home, you are probably going to lose it because someone else will buy it. This is the current market situation. So the buyers out there, do your research, whether you go on domainrealestate.com or you can have access to RP data. Do your research so that you know what things are selling for, but know that we are in a rising market, so you might be prepared. You might have to be prepared to pay a little bit more than what previous recent sale have sold for in order to secure the property. The next thing, sellers. So if you are a seller in the current market, you know what? This is the market that you probably want to get your property on the market as soon as possible. We're finding prices across the board anywhere between 3 to 6, 7% higher than pre-COVID in March 2020, and this is an incredible phenomenon that none of us thought was going to happen. Average days of the market across most places is 7 to 14 days at the moment. Things are literally flying out of the door. Just this week alone, for example, we've launched a property at 26 Beagle Street in Fitzgibbon. There is no price on it. It's a unique property, beautiful display, looks like a display home, and we've had over 60 inquiries just in 2 days alone, and we'll be opening it, opening the first open home shortly. This is to give you an idea of activities in the market. So if you were thinking of selling and you want to capitalize on the current market, you know what, look no further. This is the best market. Give us a ring. More than happy to come out and have further discussion with you. If you're downgrading, so downgrading in the current market we're in could be a potential financial win to you, because it is a hot market, prices are going up. Therefore, if you're downgrading, you're able to sell your property at a higher price, but with the fact that you're buying a cheaper property, although both property prices have gone up, you're gonna make a bigger financial saving as you downgrade. However, it goes both ways. If you're upgrading in today's market, it could be a financial disadvantage for you, as although you'll be making a lot more on your property at a lower price point, you are going to be paying significantly more for a property at a higher price point as well. So bear that in mind. However, I do want to say buying real estate is not always just about a financial gain or a financial, all about financial. It is about lifestyle as well. If you found the right home for you, the right home for your family, and not an investment, and you know you're going to be happy there for the next 5, 6, 7, 8, 9, 10, 15 years, it does not matter, I believe, if you pay an extra 10, 15, 20, 30,000, if it means that you get to secure the property, for the fact that at the end of the day, what value do you personally put in your enjoyment in that property, that location, to you and your family over the next many years? So that's something to think about, rather than just pure financial gain. So that's my advice for people. Look, if you need any further advice, pick up the phone, call me 0424153203, or email myself or my team. We're always here to help you.